Yeah, you know what time it is. Disclaimer, I am not an attorney, nor do I offer or give legal advice. So please understand that all information that we talk about in any of my webinars are strictly information and educational purposes. And most of it is just personal experiences with things anyway. So please understand this is not legal advice. And may you be blessed on your journey to find your power within these laws. Today, we're going to be talking about finance charge. And I already have here pulled up Credit Union of Texas, which is a bank I do business with. I currently have a situation going on with them, so I would love to just use them as an example. All right, here we go. On their website, they're advertising auto loans. Everyone needs reliable transportation. At Credit Union of Texas, you can rely on our trustworthy lenders to help you finance a vehicle that gets you everywhere you need to go with a low rate and quick application process. The best auto loan rates. Truck and car loans made easy. All right. C2UX auto financing benefits include low rates, immediate decisions, new vehicle search, auto protection programs, great experience, digital document delivery. Okay, so you go from approved to funded, all in the comfort of your own home. Wow, they make this stuff sound really nice, right? They are really here to help us, to get us to where we're trying to get to, right? Well, let's take a deeper look into what a finance charge is, shall we? I already have it pulled up here. We're going to look at 12 CFR 1026.4. For those who want to know where you can find this, Cornell Law. This is the CFR, Title 12, Banks and Banking, Chapter 10, Bureau of Consumer Financial Protection. Don't you love it? Who are we trying to protect? The consumer. Part 1026, Truth in Lending, Regulation Z. Subpart A, General, subsection 1026.4, Finance charge. Definition: the finance charge is the cost of consumer credit as a dollar amount. The cost of consumer credit as a dollar amount. It includes any charge payable directly or indirectly by the consumer and imposed directly or indirectly by the creditor as an incident to or a condition of the extension of credit. It does not include any charge of a type payable in a comparable cash transaction. Wow. It does not include. So if we're getting financed, it does not include cash. That's what I interpret from that. It does not include cash. So you cannot include cash in a finance charge. So this is where we understand that whenever you're financed, it should not include cash that you have to pay because it's all included in the finance charge. Now, let's take a look at something else real quick. I'm going to take you to 16 CFR 433.1, and it's up under 433, Preservation of Consumers' Claims and Defenses. Right here we have more definitions as well. Person is an individual corporation. Consumer is a natural person who seeks to acquire goods and services for personal, family, or household use. Creditor, a person who in ordinary course of business lends purchase money or finances the sale of goods or services to consumers on a deferred payment basis, provided such person is not acting for the purpose of a particular transaction in the capacity of a credit card issuer. Purchase money loan. A cash advance which is received by a consumer in return for a finance charge. Oh, wow. Did we just see that? A cash advance which is received by a consumer in return for a finance charge within the meaning of the Truth in Lending Act. Whoa. And Regulation Z, which is applied in whole or substantial part to a purchase of goods or services from a seller who, 1, refers consumers to the creditor, or 2, is affiliated with the creditor by common control, contract, or business arrangement. Interesting. So when we go to get financed, right, from these banks, what are we supposed to be receiving? The car? Is the car what they're financing? Is that what we've been led to believe? Or the law says it's a purchase money loan and it's supposed to be a what? Cash advance. Because it's in return for a finance charge. So if we give them a finance charge, they're supposed to give us cash. But we think we're getting the vehicle. Now, there may be some to say, well, hold on, man. Is that right? Well, let's just look. Because from what I understand, what is the vehicle in the situation? Well, I have my contract pulled up here. Let's just look over it and see what it says. All right, this first little box they have here is truth in lending. Annual percentage rate, finance charge, the dollar amount the credit will cost you, amount financed, the amount of credit provided to you or on your behalf. So they're providing us credit. Did you catch that? Right? We read before in my previous video, the credit is your right, but they're making it seem like it's a privilege here. All right. Totals of payments and amounts you have paid after. Okay, let's just keep scrolling. Let's see what's actually going. Property insurance, filing, late charge. All right, security. Let's say collateral securing other loans with the credit union may also secure this loan. You are giving a security interest. In your shares and dividends, and if any, your deposits and interest in the credit union and the property described below. What property? Collateral. Toyota. So the vehicle is collateral. The vehicle's not the loan. The loan should be that cash advance nobody has received, or maybe some of us received it and some of us have not. So ask yourself, did you receive cash or did you receive collateral? You can't receive collateral because it's your property. You're giving it as collateral. What did I give as collateral in this transaction? Toyota Corolla 2020, the VIN number. The value of it was $17,000. Itemization of the amount financed, $20,000. We got amounts paid to others on your behalf. We will be retaining a portion, $19,555, $75,475. How could they give something to someone else on my behalf when they're supposed to give it to the consumer? That's what the law says. I didn't receive no cash advance. Did you? All right, let's keep scrolling through this document. Loan agreement. In this loan agreement, all references to credit union, we, our, or us means the credit union whose name appears above, and anyone to whom the credit union assigns or transfers this agreement. All references to you or your mean each person who signs or otherwise authenticates this agreement as a borrower. Promise to pay. So this is turning into a promissory note, right? That's what we're seeing here. Okay, more definitions. Y'all see these definitions? All right, we're gonna keep scrolling. We get down here to this signature page, and we're gonna see what's going on there. Oh, there go the signature. Now, in the previous video, I touched on this little notice right here. Right? They just try to slide this little notice, and if we remember, this is the holder in due course rule notice right here. Right? And this little box right here above the 13, the following notice applies only when the box at the left is marked. They put a restriction on this notice. Yeah, they put a restriction on this notice. Let's check that out real quick. Boom. All right. FTC. Staff Guidelines on Trade Regulations. Regulation rule concerning preservation of what? Consumers' claims and defenses. Holder in due course rule. All right. Now I've already went over this in the previous video, so I'm gonna go right down to the good stuff of what we're talking about right here. For those consumer credit contracts in which the rule requires insertion of this specific contract provision or notice, the notice will become a part of the agreement between the consumer and the creditor. The required notice will be treated in the same manner as other written terms and conditions contained in the agreement. For this reason, where the use of the notice is required, the notice must appear without qualification. The requirement that a contract contain the notice is not satisfied if the text of the notice is printed in the contract in conjunction with additional recitals which limit or restrict its application. Where the text of the notice is qualified by an additional language, the contract fails to contain the required notice. Up here? In other words, the consumer may assert by way of claim or defense a right not to pay all or part of the outstanding balance owed the creditor under the contract, but the consumer will not be entitled to receive from the creditor any affirmative recovery which exceeds the amounts of the money the consumer has paid in. Yeah, we just read that. So, back to this contract, this little box negated this whole statement right here if it's not checked. This is why we have to read these contracts. They are out here with some bull crap. Unfair, abusive, and deceptive practices. It's just this simple. Let's take a look here in Investopedia and Collateral, because I really want to hammer in on this collateral a little bit more. What is collateral? Collateral in the finance world is a viable asset that a borrower pledges as security for a loan. When a buyer obtains a mortgage, the home serves as the collateral for the loan. For a car loan, the vehicle is the collateral. A business that obtains financing from a bank may pledge valuable equipment or real estate owned by the business as collateral for the loan. A loan that is secured by collateral comes with a lower interest rate. I bet it does, right? Than an unsecured loan. In the event of a default, the lender can seize the collateral and sell it to recoup the loss. Now ask yourself, did you receive a cash advance for your finance charge? Or have you just been content with having collateral that already had to be yours, because you can't give something to somebody else or offer something to somebody else unless you already own it, right? Just as I showed in one of my previous videos with the warranty deeds on your property, it shows you what you got the property for. Most cases it's $10. Or if you paid the whole amount, they say they received the whole amount. Here we go right here in a vehicle situation, and we're conditioned to think that the vehicle is the collateral, right? That's what we got in exchange for our credit. But when we actually read these documents and start looking up these words, we find out it ain't what we thought it was. So now that you realize that you have been fraudulently induced, maybe, or unfair, abusive, and deceptive practices you have experienced, sounds like you got a claim. Might want to check your paperwork for that arbitration. Stay tuned for my next video, and I'll show you what you should do. or at least what I've done. Peace and prosperity.